Chris, gold in particular is pretty interesting. It's getting this safe haven bid. There are also questions about what Vladimir Putin is doing with the gold holdings and potentially buying more gold. How does that all stack up for gold's prospects?
Yeah, I mean, we had already seen gold rally on the back of a lot of these concerns, I think earlier in February. I think, when we were looking at the market, we saw flows into ETFs, stronger sentiment, higher prices through much of the month as investors began to realize the risks that Ukraine and Russia's invasion of Ukraine would pose. What we've seen most recently, I think, is a really strong example of gold fulfilling that sort of classic safe haven bid. And as we recognize, and as you just mentioned, our high scenario of 2057, I think, reflects some of the worst case scenarios where we could see gold prices go as this crisis continues to escalate.
But what about the role of gold for Russia and an alternative to sanctions? There's also been talk of Bitcoin, for instance, as a way to circumnavigate that. How do you see the use case there?
Yeah, we've seen central banks broadly in an attempt to de-dollarize their holdings, diversify their central bank reserves, buy gold. We've seen a number of countries who are subject to sanctions focus on gold, and now where people are talking about cryptocurrencies as well as one of these ways to sort of circumvent sanctions. We don't have a ton of insight on that yet, but what we have seen is Russia, prior to the last few years, had been building up quite aggressively. It is a substantial part of their holding. They're a top 10 holder as far as central banks are concerned. So there's certainly a gold stockpile at Russia's disposal. But what we're seeing more broadly, to bring it back to the investor space, is investors are really layering in to gold as a sort of perceived safe haven to smooth out their holdings, to smooth out this sort of volatility that we're seeing expressed in equity markets. As equities have gyrated, so has gold, and we think we'll continue to see that as long as this crisis continues.
Chris, wanted to hit natural gas. Obviously, a somewhat less global commodity than crude oil, but it moves together. There are implications here from Russia. So where do you see the price right now? Does it seem to be in tune with what the message from crude is?
Yeah, oil tends to take the limelight, and we've certainly seen that in how markets have traded and how media has talked about the crisis. Gas in particular, and for Europe, Russia is a major supplier of natural gas. 38% of Europe's energy imports come from Russia in the gas space. And that is obviously a very significant portion that goes to power, that goes to residential and consumer demand, that drives industrial demand. So gas is a very key story. When we're talking about the potential for sanctions, which thus far have excluded energy, potentially being extended to energy, the White House said that energy sanctions are not off the table. That's very important for gas markets and one of the more difficult things to see. European gas prices we've seen rally significantly in recent days as the crisis has continued to escalate. When it comes to the United States, because exports are capped by the capacity, the nameplate capacity of export facilities, it's a bit more insulated when it comes to U.S. natural gas prices, but Europe in particular is facing an increasing inflationary pressure from this gas price environment, as well as some more substantial concerns as well.
And finally, Chris, just on the gold call, just a challenge might be, we're about to go into a Fed hiking cycle, and that's usually not good for precious metals. And I think we saw the last cycle low for gold when the Fed began hiking rates. So could that stand in the way of your rally call?
And that's exactly what we haven't moved our base case, which is much lower at 1749, reflective of a scenario if there weren't these types of issues. When we're talking about our high scenario of 2057, that's really tied to this crisis, the potential concerns about global growth. What we mentioned in the piece that we've published recently is that gold tends to perform quite often in the short term, regardless of the type of crisis, as a perceived safe haven. As far as durability for that performance, and I think this gets at what you're asking, that really comes to economic and financial fallout. So if the economic and financial fallout from this crisis is more long-term, that's when I think our high scenario is more in play. Otherwise, we are really contending with these longer-term macro factors. Exactly what you mentioned, the Fed raising rates is one of the key longer-term sort of macro headwinds that gold faces. But right now, as it stands, the crisis is certainly in the driver's seat.
Yeah, we'll see how that gets tested with the rate path in the rest of this year. Chris, thank you very much.
Thank you.
All right, we have just about 41 minutes left before the bell. The Dow is now down just under 60 points, just kind of waffling around this area, though the S&P 500 is down more than half.